Howdy, Jacob here. Today we're looking at Marine Products Corporation, ticker symbol MPX. It's in the leisure products industry. Looks like they design, manufacture, and sell recreational fiberglass power boats for the sport fishing boat markets worldwide. Okay. $392 million market cap, $331 million enterprise value, humongous return on invested capital, and ROE is the same, which would mean that they really don't have a lot of debt, um, which is good. So if they find a business to invest in, they get a massive return on that investment. So that's great. But it is a very small market cap. We're looking at sub 400 million. So I like to look at insider ownership, and we can see that the percent held by insiders are 74%. So a huge amount of insider ownership, which is good to see, especially for smaller companies with the goals that the management's going to do the right thing because they have stake in the business. So they it's just a better feeling and more confident and easier to be more confident in the management when they have skin in the game. So capital expenditures really low. It looks like most recent year was 10 million, but pretty historically been 1 to 2 million, so very low. Cash from operations outside of 2021, very consistent, about 30 million. It's pretty grand there. This dividend they can afford, 19 million paid out, which is less than, let's say, 30 million on average of the last 5 years. That's about two-thirds of it. So reasonable payout there. Let's look at this balance sheet. They've just been increasing cash quite a bit from 3 million in 2016 to they now have 43 million in 2022. No long-term debt on the company. Doesn't look like they have any interest-bearing debt. So that's great to see. Um, yeah, I think I'm ready to start making some assumptions here. So, revenue growth. I mean, I feel like the sales for sports boating was very high from COVID and everything. So, I might assume maybe 2% growth because it'll probably be very volatile in revenue growth, but this is just assuming 2% a year on average for the next 7 years. And then for margins, let's see, maybe 9%, 10%. I like that. Free cash flow has historically been consistently higher. That's good to see. Share change, maybe 0% share change. Looks like they buy back a little bit, and they also have a good amount of stock based compensation, but I'm comfortable with zero. I mean, they have very good return on invested capital. That's fantastic. No debt on the company. I might, I mean, obviously they're paying out a lot in dividends, but if they do find something to invest in, I think that they'll be able to get a return on that, good return on that investment. I think I'm comfortable maybe with the 14p and priced free cash flow, 15% return. As for the dividend, I think I mean, they don't really do anything else with their money. Like they don't look like they make many acquisitions. They buy back shares and pay a dividend. So maybe, I mean, I think I'm fine keeping the dividend at where it's at right now for the next 7 years. That's gonna, be 4.9% right now. That's a comfortable, safe dividend, I think. So this gets us to a price that is saying it would need to fall about 20% before you get a 15% return on this investment. I think I'm fine with adding this to, business to look at. I think that dividend is pretty safe, and they've historically paid out a dividend pretty consistently for the past, yeah, for as long as the data here goes. And I think that they're definitely a better business than they were 10 years ago. Without doing research, in-depth research on it, I won't know whether they'll I can assume they'll be a better business 10 years from now, but looks like they have been doing a great job. And the fact that they don't have any debt is also fantastic. I think for, investment purposes, from a safe standpoint, I think the only thing that I would be a little skeptical of is just that it's such a small company. Like I said, under $400 million. But again, the fact that insiders have huge ownership into the business, I think they're going to make the right decisions here. And I also love seeing these margins: 17% in 2013 up to 24% on gross margin, and then operating margin from under 6% to over 13%. That along with return on invested capital being as high as it is definitely a very good thing to see for companies, meaning that they can increase their margins and people are still buying. So definitely a good business. I mean, this will be an exciting one to do more research in. It's not too far off the price, so I should be doing research in not too long. But definitely a good business for sure. Just not quite at the price that's going to give us the 15% return that I currently have in my assumptions here. But definitely a great business, and yeah, just waiting a little bit before it falls a little more. Thank you, and have a good rest of your day.